All right, and welcome back from the episode of Carnivore Trades. Today is Wednesday, May 11th, 2022. If you like the content, please like, comment, subscribe, etc. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, what a session here on the street. We had a dump initially pre-market on the CPI. Futures are actually green this morning, green, nicely green too. And we got the CPI print, and it was kind of a mixed kind of reaction. So market was expecting 8.1. It came in at 8.3, and it's kind of a mixed thing. So inflation did slow down a bit, but it still came out hotter than expected. So the market sold off initially, but then we immediately had a kind of a buy the dip rally here. And long story short, bulls just couldn't hold it. I mean, it was really on a silver platter. All they had to do was put in, any sort of bid. You could see we were flagging up nicely, had a nice kind of bullish pattern here. But in downtrends, bullish patterns can fail a little bit more often, as in, uptrends, bearish patterns can fail. So just struggling with this 405 level on the spiders here. And then they used a lot of their firepower in the middle of the session to push the market down. And, we got a little bit of a bounce here. And then now they're really just trying to puke everybody here into the last hour. If their goal is to get everybody bearish, they've definitely achieved that, I think. VIX still not really pushing up that much. You see the UVXY here is fractionally positive. And that is partly because XLE is green, and financials are actually holding up okay. So you're not seeing complete fear out here. So there is a possibility that before this market can put in some type of a low, I think at this point we probably need to gap down. How far of a gap down do we need? It depends. I mean, it could be down to 390. I did a calculation earlier today, and there is a bit of a level around 390, 391 here on the spiders, so that could get tagged tomorrow. I know a lot of people are talking about 385. That's possible. I mean, that's down there, but that is possible. But if we got into that area, we'd probably have a pretty big surge. You'd probably see a lot of short covering. And really my thesis here still hasn't changed, at least for next week. I still think there's a really good chance that, maybe if we do put in a gap down, we will rally into OPEX. There's just way too many puts in the system. And if they continue with this job here that they're doing to get everybody bearish and get everybody to barf their shares, I'd say that's probably increasingly likely. It's just a matter of what happens really in between them. But overall, pretty wild day here on Wall Street as market is set to close here. Spiders down 1.6%. We got about 10 seconds left. Looks like a little bit of covering here going into the close, but overall a pretty nasty day. Let's take a look at the spiders longer term here. So there's the closing bell. So we're still looking at this trend line, and this is, based on a weekly time frame. So sometimes, first of all, when you have heavy volume and lots of velocity, a lot of the time you can pierce a level. So that is not unexpected. But when you have a weekly time frame, sometimes it takes a little bit of time to play out. So there's nothing to say we couldn't gap down and then rally Thursday, Friday, and close at the highs of the week and change that weekly candle around. That does often happen with weekly charts. Let's take a look at the triple Qs as well. So coming into this zone here, that does not say that they can't get a little bit lower, but take a look at this. We're very close to a 50% fib here on the triple Qs. That's very hard to believe, isn't it? So all the way, we've basically, round tripped that to a 50% fib on the triple Qs. And really that's just since November 22nd. So a pretty amazing move here for the triple Qs, and a lot of air being let out of this market. But now you're starting to get down to that, let's just clean this up here. We're starting to get down into a pretty good support zone though. Could it gap down and go a little bit lower, maybe fill this gap? Yeah, I mean, that's a long way down from where we are now. I don't think we would gap down that far. But I mean, you're into a really good area of support. This is where the institutional money is sitting. So, and again, going into OPEX, very oversold, a lot of put buying. So really the thesis hasn't changed much, but this market is getting beat the heck down right now. You just see no really even a counter trend rally, just down, kind of consolidation down, consolidation down. So we really haven't even had a counter trend rally for more than a day or two. So market getting beat down here. Let's take a look at the diamond. So this has a level coming in at about 315. So right in this range here, so you had kind of the chop right in that area, tried to make an all-time high, couldn't, and you got stuck consolidating there. So that's going to be a good support zone. There's also a little gap right there as well on the diamond, so maybe that gets tested. That should be a decent level. IWM, so Russell 2000. We've been watching this area here, and again, weekly chart. Sometimes it takes a little time to play out, but also just like the triple Qs, now into a 50% fib. Now actually just above that, so just touching it. And then there is that gap down here. I don't think that gets filled this week, but that is there, and that will get filled eventually. But again, 50% fib for the Russell 2000. So we've given back 50% of the gains from the March 2020 lows. So pretty remarkable stuff here in the market, all things considered. Granted, the real positives here, if there are any, is there's there's tons, like I've been saying yesterday, there's huge falling wedge patterns on a lot of stocks. Everything is really oversold, and there's a lot of puts in the system. Other than that, the trend is down, and I think any rally here is going to get sold most likely. But that said, we are due for some type of a rally here, even if it is just a little relief bid, all things considered. And again, going into OPEX week, I got to think that's a high probability of playing out. Semiconductors, you see the falling wedge we've been talking about, and it is into a good support zone here, especially on the weekly. So big chopping area here. There's a lot of support in that range, but semiconductors getting hit just like everything else did. Same thing with IGV. This is into a support zone as well. Previous all-time high, pre-pandemic high, right in that area. Maybe it wants to go down and test 250. If we gap down, that'd be also be a pretty big gap down, but it's possible. Eventually it will get hit. But overall, a lot of things really oversold. And again, that's the positive here, is that everything is just so beat down that I think if we gapped down, it would probably give you some type of a near-term capitulation here moving forward. All right, now Dow Transports holding up really well. So this is another kind of positive here for the market. Never took out yesterday's low, and you're still holding this pivot here. Again, let's call a spade a spade. This is a pretty good sell-off here. It's not making anything else out of it, but relatively speaking, it's holding up much better. So, maybe for a bounce, this is a sector that you could look to play. But again, we have to actually get the bounce first, and we need follow through. So anyway, so I thought it was interesting. Dow Transports are holding up okay. So let's talk about rates here. So rates closing below this green bar low here on a daily basis, and a nasty reversal. So they reversed hard. They were up. They did bid really hard off of the CPI news, and they closed below this green bar low on a daily basis. If you lose this low, 2907 on a weekly close, meaning Friday close, I'll go on record. I'm telling you, rates will go into correction mode. So we'll see probably about 2.4, 2.6 very quickly. I don't know if that means they've topped out forever, but that's a really good area. And if we lose that weekly green bar low, we're in corrective mode here on rates. We might already be in it, but we need to wait till Friday's close to really see that. So we may have had a little bit of a kind of blow off move there with the CPI print today. But we'll have to see moving forward. If you look at TLT, an engulfing reversal today. So a nice move for TLT, coming nicely off the lows there. So maybe, bonds, they're due for a rally. We know that. And typically you'd think that would help tech out. Today, that wasn't the case. Tech got whacked. A lot of it may have had to do with Luna. We'll talk about that in a little bit. It's just an absolute monster liquidation that happened today. So we'll go over that afterwards. But anyways, TLT here, 30-year, coming in nicely. Still holding this green bar. 30 years a little bit stronger, but again, same deal. So close below 29.68 on a weekly basis would put this in a correction mode. Let's look at HYG. So high yield debt, strangely enough, it's kind of like hung in there. It's weird to say. So low 76, 72, we closed above that low. And I find that significant because you can't say that for the spiders. You can't say that for the Qs. You can't say that for the Russell. You can't say that for the diamond. So HYG kind of holding up here. JNK also holding up. And this one's the really strange one. LQD was green today, up 0.5% in a market like this. So maybe it's nothing. Maybe it's something, but definitely very strange to see high yield debt holding up when the market's essentially getting slaughtered. So maybe a possible little sign of things to come here. Maybe we do get a rally into OPEX after all. Anyways, XHB, what can you say? It took off. I'd have loved to have a nice little rally here, a little bit higher. Too short, but it is breaking down now. This weekly chart pattern, nice bear flag there on the weekly and breaking down. So it's probably headed to at least that 200 moving average in the near term. Right about, you got this previous high right there around 54. That should be a good area. Let's take a look at ITB. Again, bear flag breakdown. So again, you're probably headed for that 200 in the near term. And nice breakdown. Now don't chase it down here, guys, unless you already got on it. But don't chase it down here. It's already taken off. But a nice little bear flag breakdown on the home builders VNQ. So I told you guys yesterday hit a target measured move, and it actually held up okay. So today, considering down 22 basis points, but it wasn't down like the market was, the rest of the market. So maybe there's something to that little measured move. Maybe this can get a bounce here, at least hold the lows. But obviously weak, just like everything else is. XLF. Also holding yesterday's low, but again, let's call a spade. It's down 1% today, and it was up nicely earlier. But it did come in as bonds started to rally, so bonds hitting financials a little bit. JP Morgan did finish down 6.63%. Bank of America and Wells Fargo have a little bit better charts here, all things considered, but a little bit of reversal here with bonds starting to bid here in the market. Broker dealers, again, coming into this, here we go. It's coming into this choppy area. So it's one little kind of chop here before you broke out. And again, weekly chart pattern. Sometimes it takes time for it to play out. I think there's a 382 here as well. Yep, so you got a 382 fib right there as well. And again, sometimes it takes a little bit of time when you have a weekly chart. So there's still a chance for it to get a bid. Again, if we gap down tomorrow, we could still rally up. This is oversold as well. And this usually trades with high yield debt. So if high yield debt does get a bid, this maybe gets a bid as well. So we'll continue to watch that. Energy here. So crude having a nice day. We got a bullish inventory number earlier. Still, well inside of this red bar and still not making higher highs yet, but you are kind of, it's weird. You're kind of making lower lows too, or higher lows too. So remember we had this kind of wedge pattern here before. It's almost like we kind of have it again now. But we'll see what we get on crude here. I still think it's got to head lower. And if inflation does come back in a little bit, again, it might be a good positive for the market in the near term because commodities will come down and so on. But the market's going to realize that it means recession very quickly. So again, we'll just have to wait and see here. But, crude having a nice day, all things considered. We'll just leave it at that. XLE, kind of an inside day. Came way off the highs, especially towards the last hour. But, a lot of people are hiding in energy right now because a lot of these stocks pay dividends and they're still making money. But eventually, they won't be able to hide here anymore if margin calling starts happening. OIH here, a little bit weaker. We talked about that yesterday. But again, it's still a strong sector and we'll leave it at that. Nat gas, there's no real pattern here, so don't do anything with it right now. But a nice bounce today. Was following crude up and did finish in the green. Dollar index. So originally I thought this had a chance to possibly put in a top here today. If we look on the intraday, so it bounced around on the CPI number and then it sold off sharply. And I said, wow, this might be, maybe the dollar is going to top out here. And maybe that's kind of the blow off move, but it did recover and close green. So what can you say? Dollar's still holding up for now. We'll see what we get into next week into OPEX. And again, the dollar is just really overbought, but it's holding up and there's a little bit of fear in the market. So that is going to happen. Gold here, got to bounce off the 200 moving average. Again, a little bit of risk off kind of going on today. Bonds did bid, so that helped out gold a little bit. And gold's holding up okay. Won't make too much more out of it right now. GDX, this is another victim of kind of really forced selling and whatnot. But, kind of weak on the chart. Didn't take out yesterday's low, but it still is pretty weak, all things considered. And silver, Finally getting a green candle here off of that triple bottom. It did obviously pierce through these tail lows, and it is bidding off that. I don't know how much of a bid it has in it, honestly. This is a pretty weak chart here. And if bonds really start to bid because of essentially inflation causing deflation, this is going to hurt a lot of commodities. So bear that in mind. All things considered, though, platinum did have a nice day, a nice pop there, up 4%. Still going to be that 1,000 handle is going to be resistance. Palladium looks like it's, we had a breakdown and now starting to flag beneath that, so maybe it wants to head lower as well. But all things considered, it is kind of a weaker metal right now. And copper getting a bid here, but doesn't look like much more than an oversold bounce off of the lows. All right, so Bitcoin. I told you guys yesterday it's got to go down and hit 28. It's getting very close there, so it's within range here. That's a measured move calculation I did. Maybe it pierces a little bit below that. That wouldn't be uncommon. Ether, geez, all the way down to 2,100 here. And again, watch this pattern here on the weekly. If we close below that, if we rally back up and close below that neckline on Friday afternoon, you can negate this head and shoulders, but it will be triggered Friday if we don't close back above it. So just be aware of that. But crypto taking a huge beat down. Obviously, Luna, the center of attention here. And look at the, this is just the power of a failed inside bar. So we had a nice bullish pattern building up here and rolled over. As soon as you close below it, it was pretty much off to the races. Now, obviously, there's a lot more things going on here. There was leverage and everything else, tether and so on. But I mean, this is the danger of, risk assets, crypto and so on, even, the stable coins going from $80 to just over $1 in what, 5 days, 6 days. So absolutely incredible, and this is a good level here at 57 too, but sometimes when you have liquidations and margin taking over, it just doesn't matter. So we're going back to levels we haven't seen since 2021. Just totally unbelievable. It's totally unbelievable here. So massive moves here, especially in the crypto space. Everything getting hit here. Polkadot down to $8 through that double bottom, just knifing through that double bottom. Litecoin. I remember I told you guys that I didn't like this level over the weekend because you already kind of consolidated a little bit, and it did push right through that. It is bouncing a little bit here. It's trying to hold up, but I mean, these are really weak right now. So I would avoid them at the moment. Bitcoin probably has, again, it's going to have a good level around 27, 28. I don't know if it gets much more than that though, especially if we get margin selling. But again, I still like our chances. I know I keep saying this like a broken record, but I still like our chances for a rally into OPEX, all things considered. We probably need a gap down to get that out of the way. They did puke everything into the close. So we'll see what kind of movement we get tomorrow. A little bit lighter volume today. Very strange, right? So the more we sell off, the lighter volume gets. That's very atypical of heavy selling. Spiders down 1.6% today. And really, you get the sense that panic's starting to set in a little bit, but it's just very strange to me that there's very light volume there. I'll have to keep monitoring that moving forward. Anyways, guys, I'm going to wrap it up here. Come find me on carnivoretrades.com. Like, comment, subscribe, etc. And I'll talk to you guys all tomorrow.